In little more than a decade, cryptocurrency has evolved from an obscure experiment discussed on internet forums into a trillion-dollar ecosystem that has captured the attention of the world's wealthiest individuals. What began with Bitcoin as a rebellion against centralized finance has now become a high-stakes arena where billionaires, hedge funds, governments, and tech giants are placing bold bets on the future of money. But the crypto story is no longer just about Bitcoin and price speculation. Today, the real action lies in what many call crypto's next frontier, a convergence of blockchain technology, artificial intelligence, decentralized finance, tokenized assets, and digital identity systems. Behind these shifts are powerful billionaires whose investments are shaping how digital wealth will be created, stored, and controlled in the coming decades. This is the story of those gambles who is making them, why they matter, and what they reveal about the future of global finance, from Bitcoin maximalism to strategic diversification in the early days. Crypto billionaires were often ideologues. Figures like Michael Saylor, executive chairman of MicroStrategy, famously transformed his company's balance sheet into a Bitcoin vault, arguing that Bitcoin was digital gold and the only reliable hedge against inflation. Saylor's gamble was simple but extreme. If Bitcoin succeeded, MicroStrategy would thrive. If it failed, the company would suffer catastrophic losses. This kind of all-in thinking defined the first wave of crypto billionaires today. However, the smartest money is no longer betting on a single coin. Instead, billionaires are diversifying across entire blockchain ecosystems, Ethereum, Solana, Avalanche, and emerging Layer 2 networks. The focus has shifted from which coin will moon to which infrastructure will power the digital economy. This evolution signals maturity. Crypto is no longer just a speculative asset. It is becoming foundational technology. Ethereum and the rise of programmable money. If Bitcoin is digital gold, Ethereum is digital oil, and billionaires know it. Ethereum introduced the concept of smart contracts, enabling programmable money and decentralized applications. This innovation laid the groundwork for decentralized finance, DeFi, NFTs, decentralized autonomous organizations, DAOs, and more. Billionaire investors such as Mark Cuban and Vitalik Buterin, Ethereum's co-founder, who himself became a billionaire, have emphasized that Ethereum's value lies not in price charts but in utility. Cuban has repeatedly argued that DeFi represents a fundamental challenge to traditional banking. It's offering lending, borrowing, and yield generation without intermediaries. While many DeFi platforms collapse during crypto winters, billionaire capital continues flowing into projects focused on scalability, security, and regulatory compliance. The gamble here is clear. If Ethereum or similar platforms become the backbone of global finance, early investors will control the rails of tomorrow's economy. Venture capital enters the blockchain arena. One of the biggest shifts in crypto's next frontier is the involvement of institutional venture capital. Led by billionaire-backed firms, Andreessen Horowitz, A16Z, founded by Mark Andreessen and Ben Horowitz, has poured billions into blockchain startups. Unlike retail investors chasing price pumps, A16Z invests in developer tools, infrastructure, and governance frameworks. Their thesis is simple. The biggest wealth won't come from trading tokens, but from owning pieces of the companies and protocols that build the decentralized Internet of Phone, referred to as Web3. Other billionaire-linked firms, including Sequoia Capital, SoftBank, and Tiger Global, have followed suit, despite suffering massive losses during market crashes. Their continued participation suggests long-term conviction rather than short-term speculation. This is a critical signal. Billionaires are betting not on hype cycles, but on structural transformation. The DeFi gamble, reinventing banking without banks. Decentralized finance remains one of the boldest experiments in crypto history. At its peak, DeFi protocols held over $100 billion in locked assets. Then came hacks, collapses, and regulatory scrutiny, yet billionaires haven't walked away. Instead, they're refining the model. Investors are now backing real-world asset RWA tokenization, where government bonds, real estate, commodities, and private credit are brought onto the blockchain. This approach combines traditional financial stability with blockchain efficiency. Billionaires see this as a bridge between old money and new technology. If successful, DeFi could become a parallel financial system faster, more transparent, and accessible to billions of people excluded from traditional banking. The risk is enormous, so is the potential reward. NFTs beyond art? Digital ownership reimagined and fungible tokens. NFTs exploded into mainstream consciousness through digital art and collectibles. Many wrote them off as a fad after prices collapsed, but billionaires are betting that NFTs were never about art alone. Investors like Jay-Z, Mark Cuban, Paris Hilton continue to support NFT projects focused on intellectual property, gaming, music rights, and digital identity. The next frontier here is ownership in the digital age. NFTs can represent access passes, land titles, academic credentials, or royalties that pay creators automatically. Billionaires understand that whoever controls the standards for digital ownership controls massive economic value. Their investments suggest NFTs will quietly integrate into everyday systems, often without users even realizing they're interacting with blockchain technology, the Metaverse. Virtual worlds, real money. Few concepts have divided opinion like the Metaverse. While mainstream interest has cooled, billionaire investment has not disappeared, has become more selective. Figures like Mark Zuckerberg, despite criticism, have committed tens of billions to building immersive digital environments. Meanwhile, crypto-native billionaires are backing decentralized virtual worlds where users own land, assets, and governance rights. The bet is that future work, entertainment, education, and commerce will increasingly happen in digital spaces. If that happens, virtual real estate, digital fashion, and immersive experiences could become trillion-dollar industries. Crypto provides the economic layer for these worlds, ensuring scarcity, ownership, and trade without centralized control. This gamble may take decades to pay off. But billionaires are known for thinking in long-time horizons. Regulation. The biggest risk and the biggest opportunity. No discussion of crypto's future is complete without regulation. For years, crypto thrived in regulatory gray zones. Today, governments are catching up. While many see regulation as a threat, billionaires increasingly see it as a moat. Well-designed regulation favors those with capital, legal teams, and compliance infrastructure, precisely the advantages billionaires possess. Institutional investors are waiting for regulatory clarity before deploying massive funds. Some billionaires are even advising governments on crypto policy, shaping rules that will define who wins and who loses in the next phase. In this sense, regulation is not the end of crypto's dream. It is the moment when digital wealth becomes mainstream. Central bank digital currencies versus crypto ideals, another frontier. Is the rise of central bank digital currencies, CBDCs? Governments are exploring digital versions of national currencies. It's inspired in part by crypto's success. This creates a paradox. On one hand, CBDCs validate blockchain-based money. On the other, they threaten crypto's original promise of decentralization and privacy. Billionaires are hedging both sides. Some invest in privacy-focused coins and decentralized identity solutions. Others back infrastructure that governments can use for digital currencies. The ultimate question is whether the future of money will be controlled by states, protocols, or a hybrid of both. The psychology of billionaire crypto bets. What separates billionaire crypto investors from everyday traders is mindset. They expect volatility. They accept failure. Many of their bets will go to zero, but a few will define entire industries. For them, crypto is not about quick profits. It is about shaping systems, owning early stakes in financial infrastructure. Digital identity and global settlement networks offers power that goes beyond wealth. It offers influence over how value moves in the world. That is the real game being played. Conclusion. Who will shape digital wealth? Crypto's next frontier is not a single coin, platform, or trend. It is a complex battlefield where technology, regulation, ideology, and capital collide. Billionaires are not infallible prophets, but their moves reveal where the deepest conviction lies. They are betting that digital wealth will be programmable, global, and deeply integrated into everyday life. Whether these gambles lead to a more open financial system or a new form of digital concentration remains uncertain. One thing is clear: the future of money is being built right now, and the stakes have never been higher.